Every trading day, before this account touches anything, a team of advisors argues about it. A news desk, a sector desk, an insider tracking desk, a risk manager with veto power. The disagreement you're watching is real, pulled straight from the desk's own logs. Here's the thing, none of them are people. This is an AI trading desk I built. It runs every market morning with no human in the loop. Today I'm opening the whole thing up, the architecture, the real results, and the number is less flattering than YouTube would like. And the one day it genuinely scared me. Rules of the road. This desk trades a paper account, simulated money, real market, zero real dollars at risk, and nothing here is investment advice. This is a story about what happens when you give AI a job with stakes. I didn't build this to get rich. A paper account can't make anyone rich, which is exactly the point. I built it because every AI demo you've ever seen is a sprint, and real work is a marathon. Answering one email is a trick. Running an inbox for a quarter is a job. I wanted the marathon version of the question. And markets are the perfect proving ground, a hostile environment that punishes every mistake with a number attached. No partial credit, no vibes, just a scoreboard. And the honest version of this experiment starts with simulated money, because you don't hand a new hire the keys on day one, even a synthetic one. Most people's mental model of AI trading is one model going buy. That's precisely what this isn't. It's a desk, modeled on how humans structure investment teams, because the structure is the actual technology here. Room 1, the analysts. 10 separate advisors, separate lenses, news, sectors, insider filings, gaps, options flow, macro, global markets. They read independently, on purpose. Groupthink is a disease, and it infects machines exactly as fast as people. Room 2, the debate. Every read gets netted into a conviction score, and the advisors are free to disagree. Watch a real morning. Supermicro. Every lens agrees. Conviction plus 1.0. Coinbase. The news desk is screaming sell, the sector's negative, net short. And Oracle? The news desk hates it. The sector desk likes it. A genuine argument, settled by weights. Nobody typed any of that. That's the machine disagreeing with itself. It's the strangest thing I've ever built, and I never get tired of reading the logs. Room 3, the risk manager. Position limits, exposure caps, stop losses, veto power. The only member with a hard no. The analysts propose, risk disposes. Every institution that ever blew up because this room lost the argument. So in my shop, this room cannot lose the argument. It's code. And room 4, my favorite, the training loop. Every market close, the desk reviews its own decisions, what worked, what didn't, and why, and files the lessons forward. It even proposes its own improvements. But here's the governance. Small tweaks auto-apply. Anything touching risk needs days of evidence and my signature. It gets better at its job while I sleep. That sentence should raise the hair on your arms a little. It does mine. Okay, scoreboard. And I want to be more careful here than the average finance video, precisely because the money is fake. The desk went live in mid-June. Its first week had everything. A down 2.8% day, and up 3.8% in its best session. Up 6.4% at the peak, closing up 3.7%. But 1 week is weather. For climate, I backtested the exact same engine across 506 trading days, the longest history my data source allows. Plus 51% total, about 23% a year. Sounds great, until you see the rest of the card. Maximum drawdown, minus 21.8%. Profit factor, 1.07. Average edge per trade, 0.04 of 1R. The system's own status file puts it in writing, quote, "The edge is thin." And paper results flatter you. Perfect fills, no slippage, no fear in your hands at 3 a.m. Take every simulated result you will ever see, including mine, and mentally tax it, hard. What actually impressed me isn't the return line anyway. The desk never revenge trades. It never gets bored and does something just to feel busy. Its two worst trades on that big day, both taken against the advisor's conviction. and it wrote that down as a finding, not a feeling. The desk's edge, if it has one, isn't intelligence, it's temperament. Hold that thought, it's the entire third act. If you want the ongoing saga, the desk publishes its report card right here. Subscribe and you'll catch the day it either graduates or gets fired. Now, the part that keeps this from being an ad for robots. June 18th, the desk's best day ever. It's holding 3 positions, everything is green, and at 2:53 in the afternoon, the engine goes silent. No crash, no error message, just silence. A heartbeat that should tick every few seconds stops. For 21 minutes, a machine holding 3 open positions is nobody home. Here's what saved it, and you already know where this is going. A boring little watchdog process, written weeks earlier on a day when nothing was wrong. It notices the stale heartbeat, restarts the engine. The engine wakes up, readopts all 3 positions, verifies every stop loss held. They had. And at 3:55, the end of day flatten fires like nothing ever happened. Nothing catastrophic happened. The limits held. That is why you build limits. But I sat with that one for a while. Because here's what it actually revealed. The desk does exactly what I specified, at machine speed, without ever once asking, "Are you sure?" Every gap between what I meant and what I wrote down becomes a behavior. Slowly, with a human. Instantly, with a machine. That's not a reason to avoid automation. It's the reason the risk room exists, the reason the money is simulated, and the reason "set it and forget it" is the single most dangerous phrase in both AI and finance. That silence, by the way, is why the desk now lives on a server, and not a laptop that can fall asleep. Watching machines manage money teaches you something uncomfortable about how we do it. 3 things transfer to every human with a bank account. No trading desk required. 1. Decisions beat emotions, so pre-make the decisions. The desk is calm because every choice was made in advance, in writing, on a boring Tuesday. You can steal that wholesale. Automatic transfers. Written rules for when you'd sell. Monday's $500 chart? That's a pre-made decision, compounding. 2. The veto matters more than the idea. The desk's analysts are frequently wrong, and it survives just fine, because risk limits cap every mistake. Flip side, one uncapped mistake erases a decade of brilliance. Your emergency fund is a risk room. Your position sizing is a risk room. Build the room before you need it. 3. Review loops are the real compounding. The desk improves because it is forced to look at its own mistakes every single day. Most humans review their money never, or once, in the divorce or the downturn. A 30-minute monthly review puts you ahead of almost everybody, including several hedge funds I could name, but won't. So no, I'm not telling you an AI will beat the market. A few weeks of simulated trading can't prove that, and I won't pretend it can. What I can tell you is that the system, independent analysis, forced debate, hard limits, daily review, is the most transferable thing I've ever built. And none of it requires a computer science degree. It barely requires a computer. One more time, for the back. Paper money, not advice. Talk to a licensed professional about your actual life. The desk trades again Monday morning. It will not be nervous. That's rather the point. I ran the numbers. I'll keep running them right here.